Investing can feel like navigating a labyrinth filled with twists and turns and hidden dangers. But fear not, you hold a powerful tool in your hands, the annual report. Think of it as your financial detective guide, providing the essential clues to make informed investment decisions. This report is a company's yearly confession, revealing its financial health, strategies, and potential risks. Why should you, as an investor, care about this hefty document? Because it's the key to unlocking a company's true value. Imagine buying a house without inspecting it. Disastrous, right? Similarly, investing without thoroughly examining a company's annual report is a recipe for potential financial heartache. The annual report is your direct line to the heart of a business. It tells the story of the past year, revealing the company's triumphs and tribulations. More importantly, it offers a glimpse into the future, outlining the company's game plan for growth and profitability. This information empowers you to make savvy investment choices aligned with your financial goals. Just like you wouldn't hand over your hard-earned money to a stranger, don't invest blindly. Take the time to delve into the world of annual reports. Become your own financial detective, and you'll be well on your way to building a secure and prosperous financial future. Now that you understand the importance of the annual report, let's break down its various components. Don't be intimidated by the size of this document. We'll navigate through the key sections together, demystifying the language and highlighting the most critical information. The journey begins with the chairman's letter. This is your personal introduction from the captain steering the ship. It provides a high-level overview of the company's performance, challenges, and future aspirations. Pay close attention to the tone and language used. Is it optimistic and forward-looking, or cautious and filled with excuses? Next, we delve into the business overview. Think of this as the company's resume, outlining its products or services, target market, and competitive landscape. Look for signs of a strong market position, innovative products or services, and a clear understanding of their customer base. Don't skip the corporate governance report. This section reveals the company's leadership structure, board of directors, and commitment to ethical practices. Strong corporate governance is crucial for ensuring transparency, accountability, and shareholder value. Finally, we arrive at the heart of the report, the financial statements. These statements are the company's financial report card, providing a detailed account of its financial performance and position. We'll dive deeper into these statements in the next section. The financial statements can seem daunting, but understanding them is crucial for making informed investment decisions. Think of them as the three pillars of financial health: the balance sheet, the profit and loss statement, and the cash flow statement. The balance sheet provides a snapshot of the company's assets, liabilities, and equity at a specific point in time. It tells you what the company owns, assets, what it owes, liabilities, and the value of the shareholders' stake, equity. Next, we have the profit and loss statement, often referred to as the P&L. This statement tracks the company's revenues and expenses over a period, revealing whether it made a profit or loss. It provides valuable insights into the company's profitability and efficiency. Finally, the cash flow statement tracks the movement of cash both in and out of the company. It shows how the company generates and uses its cash, providing a crucial perspective on its financial health beyond the profits reported on the P&L. Remember, these financial statements are interconnected. Analyzing them together paints a comprehensive picture of the company's financial performance and position. Pay close attention to trends over time and compare the company's performance to its industry peers. As you delve deeper into the annual report, keep an eye out for both positive and negative signals. These red flags and green lights can provide valuable insights into the company's financial health and future prospects. Let's start with the red flags. Declining revenue is a major warning sign, indicating potential problems with the company's products, services, or market position. Similarly, rising debt can be a cause for concern, especially if it's not accompanied by a corresponding increase in assets or revenue. Pay attention to the auditor's report as well. A qualified or adverse opinion from the auditor can be a significant red flag, signaling potential accounting irregularities or other serious issues. On the other hand, there are also green lights to look for. Consistent revenue growth, strong profit margins, and a healthy cash flow are all positive indicators. A company with a strong track record of innovation, a solid management team, and a clear plan for future growth is also a promising investment opportunity. Remember, analyzing annual reports is not about memorizing every number or ratio. It's about understanding the story behind the numbers and using that information to make informed investment decisions. Look for trends, compare the company's performance to its peers, and don't be afraid to ask questions. The more you learn about a company, the better equipped you'll be to make sound investment choices.